EA Part 1, INDVIDULS. Audio Master Review Script, structured for retention. Intra. You are reviewing Part 1 of the Enrolled Agent Exam, Individuals. Part 1 focuses on 5 major domains: filing status, income, adjustments and deductions, credits, basis and retirement rules. Everything in an individual return flows in this order. Who are you filing as? What income do you have? What reduces that income? What reduces the tax? What is your basis in property? Now begin. Section 1, Filing Status. Filing status determines tax brackets, standard deduction, and credit eligibility. There are 5 filing statuses: single, married filing jointly, married filing separately, head of household, qualifying widow or widower. Single. You are single if you are unmarried on the last day of the tax year. You are also single if you are divorced or legally separated under state law. You are not single if you qualify for head of household or qualifying widow status. Single standard deduction equals the base amount plus an additional amount if age 65 or older or blind. Single tax brackets are narrower than married filing jointly. Self-employed individuals must file if net earnings are $400 or more. Dependents may have lower filing thresholds. Married filing jointly. You are married filing jointly if married on the last day of the year and both spouses agree to file together. Joint returns create joint and several liability. That means both spouses are fully responsible for the entire tax. Advantages: wider tax brackets, lower overall tax rates, eligibility for more credits. Disadvantage: full liability exposure. In community property states, income may be split by law. Injured spouse rules protect one spouse's refund from the other spouse's debts. Married filing separately. Married on the last day of the year, but files separate returns. Usually results in higher tax. Many credits are disallowed. Earned income tax credit. Child and dependent care credit. Education credits in most cases. If one spouse itemizes, the other must also itemize. Used for liability protection, or when one spouse has large medical deductions. Head of household. You must be unmarried or considered unmarried. Pay more than half the cost of maintaining a home. Have a qualifying person living with you more than half the year. Provides higher standard deduction than single. More favorable tax brackets. Temporary absences like school still count as living in the home. Qualifying widow or widower. Available for 2 years after the year of spouse's death. Must not remarry. Must maintain a home for a dependent child. Uses married filing jointly tax brackets. Section 2, DPNDNTS. There are 2 categories: qualifying child, qualifying relative, qualifying child. Must meet. Relationship test. Age test. Residency test. Support test. Child cannot provide more than half of their own support. Qualifying relative. Cannot be a qualifying child of anyone. Must meet. Relationship or household test. Gross income test. Support test. Taxpayer provides more than half. Section 3, Income. Gross income means all income from whatever source derived unless excluded. Income categories: earned income, investment income, retirement income, rental income, other income, earned income, wages, tips, bonuses, self-employment income. Self-employment income is subject to self-employment tax. Investment income. Interest, taxable or tax-exempt. Dividends, ordinary or qualified. Capital gains, short-term or long-term. Long-term gains receive preferential rates. Retirement income. Social Security may be partially taxable. Traditional IRA distributions, generally taxable. Roth IRA qualified distributions, tax-free. Early withdrawals before age 59.5 may trigger penalties. Other income. Unemployment compensation. Gambling winnings. Jury duty pay. Cancellation of debt income unless excluded. Excluded income. Gifts. Inheritances. Life insurance proceeds. Child support. Municipal bond interest. Section 4. ADJUSTMENTS and deductions. There are two major deduction types. Above-the-line deductions. Itemized or standard deduction. Above-the-line deductions. Reduce adjusted gross income. Examples. HSA contributions. Self-employment tax deduction. Self-employed health insurance. Traditional IRA contributions. Student loan interest. Standard deduction. Amount depends on filing status. Additional standard deduction applies for age 65 or older. Blindness. Itemized deductions. Medical expenses exceeding 7.5% of AGI. State and local taxes limited by SALT cap. Mortgage interest on acquisition debt. Charitable contributions limited by AGI percentage rules. Casualty losses, federally declared disasters only. Section 5, Tax Seridotes. Credits reduce tax dollar for dollar. Two types. Non-refundable. Refundable. Refundable credits. Earned income tax credit. Additional child tax credit. Portion of American Opportunity Credit. Refundable means you can receive money back beyond tax liability. Non-refundable credits. Child tax credit. Lifetime learning credit. Adoption credit. Foreign tax credit. Non-refundable credits reduce tax to zero, but no further. Section 6, Retirement plans. Traditional IRA. Pre-tax contributions. Taxable distributions. Required, minimum distributions required. Roth IRA. After-tax contributions. Qualified distributions are tax-free. No lifetime RMDs. Employer plans include 401k, 403b, 457 plans, SCP IRA, Simple IRA. Early withdrawal penalty is generally 10% before age 59.5. RMD age depends on birth year under Secure Act rules. Section 7, Basis. Basis determines gain or loss on sale. Adjusted basis equals original cost plus improvements minus depreciation minus casualty losses. Stocks include purchase price and commissions. Adjust for reinvested dividends. Wash sales disallow losses. Real estate. Purchase price. Closing costs. Capital improvements increase basis. Depreciation reduces basis. Gifts. Carryover basis from donor. Inherited property. Generally stepped-up basis to fair market value at date of death. Master memory framework. Think of Form 1040 as 5 layers. Identity, filing status. Money and income. Adjustments, AGI. Tax calculation, deductions and credits. Disposition, basis and capital gains. Everything on Part 1 fits into one of those buckets. Direct Hit EA Exam, Part 1, INDVIDULS. Master topic list, 4 full COMPTNCY. I-filing, RQRMENTS and status. You must master. A. Who must file. Gross income thresholds by filing status. Age 65 adjustments. Self-employment $400 rule. Dependents filing requirements. Unearned income rules for dependents. Estimated tax requirements. Extension rules, Form 4868. Statute of limitations basics. B. Filing status determination. Marital status at year-end rule. Divorce versus legal separation. Considered unmarried rule. Abandoned spouse rule. Community property implications. Same-sex marriage federal treatment. You must be able to switch filing statuses in your head instantly. Identify most advantageous status. Spot traps in MFS scenarios. II. Dependency EXEMPTONS and CRDITS tied to DPNDNTS. A qualifying child. Relationship test. Age test. Residency test. Support test. Tiebreaker rules. B qualifying relative. Gross income test. Support test. Multiple support agreements. Member of household rule. C custodial versus non-custodial parent. Form 8332 release. Who claims what credits? Head of household implications. You must be able to solve support percent problems quickly. Identify when someone fails residency test. Apply tiebreaker rules without hesitation. III. Gross income, INCLUSONS and EXCLUSONS. You must know what is taxable by default. A. Earned income. W-2 wages. Fringe benefits, taxable versus non-taxable. Self-employment income. Statutory employees. B. Investment income. Interest, taxable vs municipal. Dividends, ordinary versus qualified. Capital gains, SDVs LT. Netting rules. Capital loss limitations, $3,000 rule. See retirement income. Social Security taxation formula. IRA distributions. Roth qualification rules. Early withdrawal penalties. RMD rules. D. Other income. Unemployment compensation. Gambling winnings. Jury duty. Bartering income. COD income and insolvency exclusion. Alimony pre-2019 versus post-2018 rules. E-exclusions. Gifts. Inheritances. Life insurance proceeds. Municipal bond interest. Scholarships, qualified versus taxable. You must be able to instantly classify income as taxable or excluded. Calculate taxable Social Security. Apply capital loss limitations. IV. ADGUSTMENTS2 income above THE line. Know these cold. Educator expenses. HSA deduction. Self-employment tax deduction. Self-employed health insurance. Traditional IRA deduction phase-outs. Student loan interest phase-outs. Alimony deduction, pre-2019 only. SEP simple contributions. You must know phase-out logic. Understand AGI impact. Know what reduces AGI versus itemized. V standard V's itemized deductions. A standard deduction. Amounts by status. Additional amount for age blind. Dependents standard deduction formula. B itemized deductions. Medical. 7.5% AGI threshold. SALT. $10,000 cap. Income versus sales tax election. Mortgage interest. Acquisition debt limits. Pre-2018 versus post-2017 rules. Charitable contributions. 60% cash limit. 30% property limit. Carry forwards. Casualty losses. Federally declared disaster requirement. $100 reduction and 10% AGI threshold. No structure. You must compare standard versus itemized fast. Apply SALT cap automatically. Apply AGI percentage limits. VI, tax calculation and CRDITS. A tax computation. Ordinary income tax tables. Qualified dividends worksheet. Capital gain, preferential rate stacking. B. Child tax credit. Phase-outs. Refundable portion. C. Earned income tax credit. Earned income definition. Investment income limit. Due diligence requirements. D. Education credits. AOTC versus LLC differences. Refundable portion rules. Qualified expenses. E. Child and dependent care credit. Earned income requirement. Dependent care expenses definition. F. Foreign tax credit basics. You must distinguish refundable versus non-refundable. No AGI phase-out mechanics. Identify credit ordering rules. VII, alternative minimum tax, AMT. You don't need corporate-level depth, but you must know what AMT does conceptually. Preference items. ISO adjustments. AMT exemption phase-out concept. VII, retirement plans. AIRAs. Contribution limits. Catch-up rules. Deductibility phase-outs. Roth income limits. Conversion rules. B. Employer plans. 401(k) elective deferral limits. SEP contribution limits. Simple contribution rules. C. Distributions. Early withdrawal penalty exceptions. RMD starting age rules. Penalties for failure to take RMD. You must. No penalty triggers. No contribution limit structure. No Roth versus traditional treatment instantly. IX, basis and property TRNSACTONS. This is tested more than people expect. A. Cost basis. Purchase price. Adjustments, improvements versus repairs. B. Adjusted basis. Depreciation reduces basis. Casualty loss adjustments. C. Gifts. Carryover basis. Dual basis rule for loss. D. Inherited property. Step-up basis. Alternate valuation date concept. E. Capital gains. Holding period determination. Wash sale rule. Like-kind exchange basics, individual context. You must calculate gain or loss quickly. Identify holding period issues. Apply $3,000 capital loss limit. X special SITUETONS. You must recognize self-employment tax calculation. Net investment income tax concept. Kitty tax basics. Estimated tax penalties. Identity theft procedures. Amended return timing, Form 1040X. Refund statute of limitations, 3-year/2-year rule. XI, ethics and due diligence, Part 1 crossover. Even though heavy in Part 3, Part 1 tests. EITC due diligence. Record-keeping requirements. Preparer penalties. Brain the real structure you should visualize. Every individual return is. Filing status. Dependents. Income. Adjustments. AGI. Deductions. Tax calculation. Credits. Other taxes. Payments and refund. If you can mentally build a Form 1040 from memory, you own Part 1. Crossed if you want to be elite. To move from pass to expert EA. Memorize credit phase-out structurally, not numerically. Understand how AGI drives everything. No stacking rules for capital gains. Be fluent in retirement distribution penalties. Instantly identify refundable credits.